Welcome back to the Retire Young radio show. I am your host, Joshua David, on a mission to improve financial literacy worldwide. If you're just tuning in, Al was shedding some light on how these markets really work, how the institutions, the big money, the big institutions, the financial banks, the smart money, we call them, how they are moving the market, but also how us as the public, average traders, investors, how we can trade like them. And you want to learn how to read a chart, follow a footprint, and you do need a core strategy, that core strategy that we have to make better investing decisions. And Al, better investing decisions comes along with a couple different things. That's obviously you want to be in at the right time, but also you want to be in the right asset, like you mentioned in the last segment. There's multiple assets out there. Everybody knows the stock market. That's a great asset to be investing in more longer term, right? Now, there's these other assets like the futures and the Forex market that we're seeing so many people want to understand what they are. What are they? How can they benefit me? Why may I want to utilize that? Let's talk about that. Let's start with the futures market. What is the futures market, and how is the smart money using that to create income?
Yeah, people might be wondering, well, there are all these markets. Why don't I just learn one market and use that? Why don't I just use the stock market or mutual funds, which are basically is the stock market? What are these other things used for? Why do people use them? Well, one of the reasons that the smart money is so much more successful than the public is that they know how to use different assets at different times, different market conditions. You mentioned the futures market. That is an additional market. The stock market, by the way, is the smallest of all the markets. The futures market includes the stock market, so you can trade the stock markets. And basically what you're doing is you're looking at what something will be worth in the future, more than it is now or less than it is now. Again, you can trade the major stock markets, but you also have access to commodities, corn, sugar, soybeans. Your favorite, again, is
lean hogs, oil,
gold, silver, currencies, interest rates, a number of different things. And the great thing about those choices is that you can have, multiple positions that are not all correlated to each other. In other words, when one is going up, another one might not be going up. So you can use one to determine whether you're going to be long or short in another one. And these are things that we teach. I know that a lot of people listening really have had no exposure to futures or Forex or options. So
and that's okay.
It's perfect, actually, because if you're going to learn about them, you want to learn how to use them the proper way. And our students have access to information, knowledge on all of these different assets. But the reason that the big money, the smart money, uses these different assets is for a number of reasons. Number one, they can be used for short-term needs. And all of us, when you think about it, we kind of go through two periods, so to speak, in our financial world. One is when we're kind of in that income phase, when we are accumulating assets, and then the other is in a distribution phase, that wealth retirement phase. And in the accumulation phase, that's where we might need things on a short-term basis. The institutions want short-term profits, short-term opportunities, because they're there and they can take advantage of them. But if you need something now, if you need something in addition to what you have now, it has to be something that you can access on a short-term basis. Futures is a great asset to trade short-term. A lot of people trade futures for daily, weekly, maybe monthly income.
Well, the big thing out is it's available in the evening as well.
Well, it's available basically 24 hours a day. So it gives you a lot of versatility there as to when you do this. Most people that are still working are working during the 6.5 hours the stock market is open. But think about it, 6.5 hours compared to almost 24 hours. Don't you think there might be more opportunities in that longer time period?
That's that key word, is opportunity. And that's what a lot of people are missing out on, is those opportunities.
Correct. Yeah, and that is what these assets provide, are opportunities in different market conditions. And it may be that for some people, the type of trading, what their goals are, what their expectations are better served by futures than stock, for example, or better served by the Forex market, the foreign exchange market. That's a market where you're looking at the difference in exchange rates between two different currencies, open 24 hours a day. allows you to participate on a global platform. And then also, they have leverage. And this is the big thing, the big advantage. The reason that the smart money uses it is that they get better use out of their money. It maximizes the value of their assets. And it also, for a lot of us as the public, as the non-professionals, gives us the opportunity to participate with smaller amounts of money because of that leverage. And we're talking about, depending on the asset, anywhere from maybe 10 to 1 leverage to over 100 to 1 leverage. That means every dollar you have really is working at a multiple of what it is. And all of the brokerage firms will allow people to trade these leveraged assets with a margin account. And I know people that know somebody who might have traded futures or options or Forex before, probably knows somebody that hasn't done well. And that is because they don't know how to do them.
They didn't have the right education.
They don't have the right education and the right knowledge. And the number one thing that we teach when somebody is looking at trading a leveraged asset is risk management. And you can choose what the maximum amount is that you are willing to say, look at putting into a trade or willing to lose in a trade if you're wrong. And we're all going to be wrong once in a while. The key is then to manage that loss. And we teach that also. But the students that are using these leverage assets as Online Trading Academy students use a platform that includes that and will tell you if you exceed your risk.
And that's key, is to have the proper capital management. And just to, with this leverage, you're just basically being more capital efficient. I mean, we talk about smaller amounts of money. That doesn't mean a small amount of money. That's a general term. But if you can be more efficient with the capital that you do have, well, then you utilize that to participate. And if you want to learn more about the leverage, learn more about the futures market, how to trade a 24-hour market, how to participate any time of day, Al, we covered the futures market. That's probably the second largest market out there. Now, let's talk about the largest market out there. And everybody's probably wondering, well, we talked about the stock market already. Mm-hmm. It's not the stock market. The stock market is actually the smallest market out there.
It is.
What is the largest market out there? And in my opinion, I think this is the best market for, especially when these institutions are utilizing these because it is so big.
You're right. You're talking about the foreign exchange market, commonly called the Forex market, which trades about $5 trillion a day.
Was that $5 trillion?
That was with a T. That's more than you have in your wallet at this moment.
Not like $1 billion?
No, that's $1 trillion.
$1 trillion. Okay.
That's big. And so there's great liquidity there. And the reason that liquidity is important is that you want to be able to get in and out of something quickly without a big difference in the spread between what you buy something for and what you sell something for. So liquidity is great there. The 24-hour market is great. Forex trades basically with a 50 to 1 leverage, so you get great leverage there. It can be used both for your shorter term income and also for wealth, for your retirement account. So there's a lot of versatility there with that market.
Well, I think a lot of people really like that market too because it the stock market's flying right now. I mean, we're seeing huge moves every day. This Forex market, for people that want more comfort and confidence in a slower market, they love it.
Right. Yeah. And with the stock market, with those big moves up and down, it requires you, if you're going to be looking at this on a short-term basis, to be more kind of on point and to be more active. But with the Forex market, as you mentioned, it can be more of a kind of a sleep at night kind of a market, a kind of a trade.
They would call it a snoozer.
Well, I don't want to call it a snoozer because that's too close to loser.
That's a good thing, though.
But yeah, no, it is a good thing. And here's the key: the real important thing is you have options there. You have choices. If futures seems to be of more interest to you and maybe fits your needs, we have education on futures. If Forex seems to be the right way for you to go, we have education on Forex. What if options happens to be your choice? Options is what you trade an options contract on something like a stock or an exchange-traded fund. You can trade options on futures contracts or Forex contracts. Another great leveraged asset, which not only gives you leverage as far as how many shares you might be able to control for a smaller, say, like a down payment, so to speak, but also from a return standpoint. Kind of a rule of thumb with options is if the underlying asset, stock, for example, is up 10%, the option should be up about 100%. So you get some, great opportunity there.
That's with the proper buying power, right?
Well, with the proper buying power, and also options can be used as an insurance policy on a portfolio, either an overall portfolio or individual holdings. It's a great way to provide that capital preservation. Also, be able to participate in some of these assets that are so highly priced now that actually buying, for example, a share of Google or Amazon might be over $3,000. Mm-hmm. A lot of people can't participate, but with options, it allows you to participate with smaller upfront investment.
Basically, so what you're saying is if you buy one contract, you hold 100 shares,
Each
right?
contract with an option is 100 shares.
And the dollar amount is a lot different with that, too, because you utilize the leverage properly there.
Exactly.
That's how that works. I mean, it's not like you mentioned if you want to pay $3,000 for Amazon, I think you said.
Right.
You need that capital. But when you use the options market, you buy a contract and control those shares with a larger cost because they allow it to happen.
Yeah, I think the thing that most people listening might understand even better is mortgages on a home. Yeah. With a home, that mortgage down payment, say of $20,000, allows you to control a $200,000, $300,000 investment. The same is true in the financial markets if you use these leveraged assets. And the education is there. The education is available to all of us. And the ironic thing, Josh, is that most of these, what we're calling the smart money, the investment firms, the financial advisors that might be using these leveraged assets are not using them for their clients. And one of the reasons is it's a lot easier to put somebody into a mutual fund, for example, or into a kind of a pre-described portfolio that is managed by somebody else and that has high fees. Forex, for example, and futures, probably the payout to the financial advisors is a lot less than it would be, certainly less than it would be for mutual funds, and significantly less than it would be for something like an annuity. But the important point is that we provide education, the knowledge and the skill building for all of these different assets, so you don't have to choose one that may not be the most appropriate for you.
You're right. You have to have the proper education. There's knowledge that comes along with trading and investing. You have to learn the terminology, and that's just words, right? Well, then you have to learn the skills, and that's where these investing classes, we teach these different techniques that what they are, what these techniques are, what they're designed to do. And when you're teaching these investing classes, Al, it really opens the eyes for people that when they are it's something different to them, right? And when they're more comfortable, they have more confidence in their investing. But the key word is one of those other C words is have more choices. If you have more choices in your investing, then you can potentially be more diversified as well. Now, coming up next, we have a lot of listeners that are planning for retirement within their 10, 20 years or so. We also have a lot of listeners that are retired, and they want to learn more about what they can do to protect what they have, their IRAs, their 401ks, and learn more techniques to feel more comfort and confident in retirement. So coming up next, retirement. We'll be right back.